Yo, 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 welcome back to the channel. This video is brought to you by themacromonthly.com. We don't have a monthly macro out yet, but I'm working on it. It's actually a bigger task than I thought it was to develop a newsletter like this, but just to let you know what it's going to look like, it is going to be an extremely in-depth look at the markets from a technical perspective, prioritizing extremely long-term macro technical data and including other assets other than just SPX. So if you're interested in that, make sure that you hit the link down below and join the mailing list, and you will find out when it comes out. All right, let's get into the video. So last time, the primary focus of the video, we were looking at ES1 futures, which is obviously futures for SPX, S&P 500. And what we were saying was that, a lot hasn't really changed, but what we were expecting was some consolidation between these trends. And so right now, you did have a breakdown below this green trend line, but bulls were able to recover and actually close back above it, which is a big signal to me that the likelihood in the short term, at least, is that you should at least see somewhat of a small rally. And we can look at lower time frames to get a better idea of what that rally might look like. Oh, so let's take a look here. So you can see here that right now you had a lot of volume on this sell-off today. Wow, this is relatively impressive selling volume. But what we're going to be looking for to confirm that there will be some sort of rally is going to be a break above this trend line here. Let me take the extensions off of this here, because obviously this is a very aggressive downtrend that is not going to be corroborated by anything else in the chart. And let's see if we have any support here developing. Nothing of note on the hourly time frame, at least. This is not a falling wedge. You will see people on Twitter post this and say that it's a falling wedge, but this looks very distributive to me. I will say that in nature it looks distributive. The only thing that would imply so far, what I'm looking at on the chart, that would imply that you will have a recovery. Let me look at the 4-hour. You do have a nice little hammer look here. I mean, this does look like it does look like bulls bought this up. Man, I will say in this future session, if you're a bull, you really want to see price able to recover back above here before open, so that then at open you can have somewhat of a rally, at least retrace this move down here to this 707 fib by the end of day tomorrow, and then from there you'll have more decisions to be made. But if you're charting at home, don't just like watch me chart. I always say, go use TradingView. There's a link in my description down below to TradingView. My chart is not on log. Why is my chart not on log? Who charts in regular? When did I turn that off? Oh, you know what? The last video, I was charting in standard for the AMC part. Whoa. All right, let me backtrack a little bit here and just make sure. So that was your linear. You never get a linear analysis from me on this channel, so there's that. If you're a linear guy, then you probably really appreciated that, because you never get that here. Wow. Okay, so on log, you actually closed below. In my opinion, log is more reliable. You closed below this uptrend. So now what we're gonna do is we're gonna try and find another uptrend off of that buy up that's gonna act as support. But you can really get into crazy territory with this sell-off here. Let's look at the fib that we have here. Oh yeah, this is just a 618 retracement. That's why you got the bounce right there. The 618 off of this move, almost to the penny. Let's see, it might actually be to the penny. Wow, yeah, pretty much. I don't know. What do you say? Yeah, like, yeah, maybe 75 cents off, which in futures is nothing. So if you're not using fibs, then you have literally no idea why it bounced there. Let's see. I mean, there's probably, this is probably horizontal support as well. But this is just a 618 though. So if you're new to the channel, or you're unfamiliar, we usually look for retracement zones to be between 0.5 and 0.707 on SPX related tickers. And so once you confirm below the 0.5, which is what you did here today, in my opinion, because you made a new low now, then the likelihood in the recent history, at least in the last year or so, really 15 months ish, the likelihood now becomes that you will trade down to this 707, which makes a lot of sense because that would be the top of this move here. So making this a liquidity zone. So yeah, this is not good. I mean, I've been saying that this is really distributive. Obviously, this played out as a distribution up here to a T, but I think this overall move has very distributive nature to it. So as a rule of thumb here, when you get a bounce, especially on a daily here like this, you have to respect this zone with a trend. You find trends to support that bounce, which obviously was Fibonacci driven, but you want to correlate it with trends. And that is how you're going to come to a better conclusion of where you really need price to be held up. But this green trend being lost, in my opinion, is a really big deal. And so bulls really do need to recover that in relatively short order, or you are getting into the territory now where this will look like an Elliott wave, a 5-wave sequence. It really, I mean, man, yeah, it is hard to make a case that this is not in a 5-wave structure for me. And then what you're having here is that you've just had your A. Maybe you bounce up here. This looks too good. Yeah, I would say that was a 5-wave. So you measure the Fibonacci here, and your likelihood now is first target once you break this trend is 38.38 on futures here, and then some consolidation. But bears are going to be targeting 36.94 on this. And I said in the video yesterday that if that was the case, then we thought that the likelihood was that you would trade further down, and at least play the 3,500 again on futures. So we can quickly translate this over to SPY. Guys, I worked all day on the monthly macro. You're really gonna. I mean, it's really. I do think that it is gonna be like probably the best newsletter. And over the course of time, I'm gonna get better and better at it. But long term, I think the idea is something that's really needed in the community. And I think it's going to be great. I'm really excited about it, but it's going to take more time than I thought it would for me to complete. At least the first edition. The ones after that might be easier, but this one is something. So yeah, again, make sure you go to themonthlyMacro.com, and it's going to be in the description, and you put your name on the mailing list so that you get updates whenever it comes out, or I'm going to update people through there, and maybe discount codes and things like that will be there. All right, let's get back into it. So on SPY, just the way that I have these trends drawn here, see this white trend coming down here is based off of the CPI pump in December, as well as the all-time high. I was saying, I think I said on Twitter, I probably didn't tweet it publicly, I think it was a reply, but I did like the idea of it consolidating between 394 and 401 in the short term. And then obviously this just looks the structure is very bearish. I can't obviously tomorrow you can have a pop or something, but this structure is so distributive in my opinion. And so I can't look at this part of this and say that I think that the next move is like a new high. It just doesn't, that for me, and this isn't financial advice, and I could be totally wrong. I have been wrong before. And I will be wrong again, and this could be that time when I am wrong again. But I just can't see the structure and see it as a. It just doesn't look accumulative to me at all. On me, perhaps you could make the case that on this larger time frame here, this is an accumulative structure, and you're coming back for a retest. But I think that you almost are certainly. At this stage, you're almost certainly retracing this entire move here, to 387 on SPY, and then we'll see what happens. But I just can't imagine that you go for higher highs before you test 387 within the month. And it could be this ugly consolidation. I mean, that's how I charted it here. It makes sense for you to come up and consolidate within this range and frustrate both sides of the trade. But I just, and I mean, I haven't really been biased. I told you guys in the last video that I kind of been ignoring markets once we broke the bear trend, because I wanted to see what would happen after that huge rally that you had. I wanted to see what the consolidation was looking like. It ended up looking bearish in my opinion. And since then we have been bearish. And then also you can draw a larger downtrend that you have here. Let's go ahead and draw that on ES, and then maybe we redraw this path to get an idea of where in the timing of things. Let's see. This looks too aggressive, so it does kind of combine. It does fit into the thesis that perhaps you actually could have a pretty crazy rally here to close the week back up to 400. Which on you can search my Twitter for 394 to 401 or something like that, and you'll see I replied to an account and said most likely 394 to 401. It's based on this convergence of this uptrend on SPY with this downtrend on SPY, and then this confluence being tested at some point. So right now it looks like on March 3rd. You could have a rally to 401. Personally, I would say that the likelihood from there is a bearish outcome where you trade back down, unless you are able to break through this white trend. At any time, if this white trend is broken, I would say that then 387 is off the table in the short term. Perhaps in the longer term, I still would not necessarily be convinced that new highs are coming. However, I think that you would probably consolidate, and then it would look something like this. That would be my general opinion at that stage. But here you don't look so bad. Like you haven't really confirmed below the 395, which would be the 0.5 Fibonacci, like we said earlier. On this larger move here, for the example that we gave earlier on the Elliott wave, the 5-wave example that we gave, then just so you can have your SPY levels, the larger retracement, if you were to break this trend and confirm below, which you absolutely did here. We were looking at this trend on ES though. This trend here. Looks like you're holding here on the SPY version. Or was it this? Oh, it was this. I think, okay, on SPY this looks a little bit better on SPY. But still, I mean, you do have this. Oh, you do have this. What is happening? Why is it locked? Did I just lock that and I didn't realize it? I like accidentally clicked the lock. Yeah, I don't know. This looks like it. This also looks like it wants to retrace. I mean, the structure is bearish, like in my opinion. I could be wrong, but the structure is bearish in my opinion. So yeah, that's pretty much the video. I'm gonna shut it down there. Once again, go check out themonthlyMacro.com. Make sure that you join that mailing list. It's completely free to get updates. I was trying to get it released today, but I want it to be great, and in order for it to be great, I'm gonna have to work on it a lot more. So probably sometime next week.
it is a macro technical analysis, so it doesn't have to be so time constrictive. But I do want to release it like around the first of every month, just because preparing you for the next month, maybe before the month starts or something like that. I might have bit off more than I could chew on the creative side of this one, though, if that makes any sense. But yeah, so hopefully you enjoyed that video. Hopefully you gained something from it. You gained some insight. Personally, my lean is bearish on the chart in its stage right now. I don't really see. I would be interested to see like a bullish analysis on this, but I'm having a hard time like coming to bullish conclusions, at least in the like coming weeks. Obviously, like I said, this downtrend is very aggressive. You could see a short-term pop. If you break 400 on SPY, then perhaps things are different, right? If you can get up to 404 or something of that nature, then perhaps a rally could continue back up, and then we'll see. But I don't think that higher highs over this 4209 on ES1 are a likelihood at this stage. It's difficult to make that case, in my opinion. So that is, in closing, what I think. It's not financial advice. I try to keep a balanced perspective and not be so biased. I'm feeling really biased right now, but yeah, let's see what happens on this short-term rally. That is pretty likely, and then from there we'll see. So with that being said, have a good rest of your evening, and I will see you tomorrow. Peace.